Hey guys, this is Mark from TRADEPRO Academy, and in this weekend's video we're going to discuss some of the reasons why 90% of day traders fail in this industry. So grab a cup of coffee and let's get at it. Alright trade pros, so here we are with reason number one why a majority of newer traders fail is due to a lack of knowledge. Alright, so quite simply, some of the things that we see quite often from people that have blown out accounts, that have started with trading and have started to look towards quitting trading because they've lost most of their capital. Majority of these people tend to have a lack of knowledge about this industry. A majority of people tend to buy stocks. A lot of people start off buying stocks based on rumors that they hear, based on a word from a family friend that might work for the company. Majority of cases that we see typically tend to be traders that start off with very little knowledge about the actual industry, very little knowledge about actual strategies, what's required to actually do this professionally. Majority of people, even if they do go on and try to find out education, there is a lot of good education out there, but there is even more bad education out there. All right, so the lack of knowledge doesn't necessarily mean that they haven't actually tried to learn about these things. It's that they've gone to the wrong places to learn. There's a reason why free material is free. It's because you're likely the product. Okay, so a lot of traders that try to put everything together by finding out free information on the internet, while it can be very resourceful and quite valuable, the majority of people tend to go towards the free education that is made by other retail traders, people that don't do this for a living, people that have read a book on technical analysis and they've gone up and opened their own education. People like that, education like that, something that you want to stay away from. And one of the big reasons that people do fail in this industry is for that lack of knowledge. All right, number two, unrealistic expectations. The way that this industry is marketed on social media, on YouTube, you've got traders sitting at their bed, with Rolexes, with Lambos, making thousands of dollars a day, sitting on the beach, trading with several laptops. This is all just imagery, and this is something meant to entice you into the industry. And a reason that a lot of people don't actually succeed in this industry, why they end up in the 90% instead of in the 10%, is because they have expectations based on the marketing. All right, so a lot of the marketing says you can get rich overnight. A lot of people start off with a small amount of capital and they think that they can turn 2,000 bucks into $1 million within 2-3 weeks. And part of that is being a little bit oblivious to the actual reality of the industry, but at the same time, the marketers know that this is what you want to see. This is what's going to drive you towards the industry. And it's an unfortunate part of reality that, the Lamborghinis, the overnight successes, that's how a majority of people get started in this actual industry. And so that is why the cutoff rate is so high, because people come in expecting to make millions overnight, and then when it doesn't happen, they start self-sabotaging, they start taking bigger positions, they start martingaling into their trades, and at the end of the day, that results in blown out accounts. So there's a reason why in the industry there is a 90-90-90 rule, which is 90% of new traders lose 90% of their capital in the first 90 days of trading. And this is one of the big reasons why, because of unrealistic expectations. What you want to do is you want to find a mentor, or you want to find an education, or even on your own. You got to really think about this, and think about it in the sense of, if you're a doctor, would you go see a doctor that read a book, and would you go have surgery done by this doctor if they just read a book, say 2 weeks ago, about how to perform surgeries, instead of actually going through their whole tenure and the residency? Similar things with a lawyer. Would you want to go to a lawyer who just learned about these things or has been actually applying them? Right, so unrealistic expectations are drawn from charlatans, from the marketers, people that don't actually do this for a living. They market the industry for a living, but they don't actually trade. And that's where a lot of people go wrong. There is a lot of good information out there, but there's also a lot of charlatans, a lot of fake traders, and a lot of people that want to make you believe that you can do this and you can do it overnight. That's not how it's gonna work. Reason number 3 why 90% of traders fail in this industry is because of a lack of psychology. A majority of traders have what we like to call the shiny ball syndrome. And what that means is simply these traders like to jump from strategy to strategy, and they like to stick with the strategy while it's working. And then as soon as they take a couple of losers, a couple of consecutive losers, or they start hitting a bit of a losing streak, they no longer see that strategy as effective. The strategy is not working. And instead of focusing on the psychology, the person that is actually executing the strategy, what they do is they go from this strategy to another strategy. They start reading up on new strategies, trying to pick apart little tools, little indicators, looking for the next holy grail in order to start making money again. And that cycle continues and continues and continues until they either blow out their account or they just decide this isn't for them and they want to quit because it's not happening as quickly as they were sold that it might happen. All right, so lack of psychology is a big one. We're of the opinion that psychology is absolutely crucial to being a successful trader. Regardless if you're day trading, if you're swing trading, position trading, any type of trading, mindset is super important for traders. And so the traders that are consistently profitable, they understand that you have to work on yourself, you have to figure out your own mindset, how to identify the things that are sabotaging your performance and how to work on those things, how to be able to identify them in real time, and how to nip them in the butt before you actually go ahead and jump on those bad habits, such as self-sabotaging, fear of missing out, chasing the markets. Professional traders work on themselves, they work on their mindset. One of the things you'll notice about professional traders in prop firms, in institutional desks, is that these guys actually hire personal coaches, they hire psychology coaches to train their traders, okay? So if these banks are doing it, if these prop firms are doing it, why aren't you doing it? All right, that is what's keeping you from the 10% and keeping you on the side of the 90%. All right, and so our final reason why a majority of traders fail is because they don't have a plan. How simple is it to put together a plan? You got to put together a plan. It's not simple to follow the plan, but having a plan is a crucial first step in finding any sort of consistent profitability. You've got to be able to have a strategy, number one. You've got to have a risk management plan. You've got to have a limit for daily losses, a limit for weekly losses, a limit for monthly losses. You've got to have all of that figured out. And a majority of newer traders, they haven't even thought about the risk side of it. All that they see is the opportunity. They think, you know what, I have 2,000 bucks. I'm gonna make this $1 million in the next week or so. Without any written plans, without any strategies in place, without risk management, without any psychology work, there's no plan. If you've got no plan, there's a great saying, not necessarily in the trading industry, but just in life in general. If you don't have a plan, you plan to fail. All right, so one of the big reasons why a lot of newer traders do fail is because they don't have a plan. So how do you put yourself in the 10% that are actually consistently profitable? Well, if you take a look at the reasons why most traders are not profitable, we just look to do the flip of that. So lack of knowledge, obviously you're going to want to find a reputable education company, or you're going to want to do your due diligence and find your own materials. Granted, it might take a little bit longer, but the best education that you can get is from a mentor, somebody that's been doing this for a while. They have the results that you're looking for, and their strategy fits your personality. That way, as you learn the strategy, you can start to apply your own personality to it. And like I said, you'll be getting mentored by somebody that's doing this. So all the little nuances, when to stay out, how to qualify trades, how to disqualify trades, etc. This is one of the things that you'll want to know how to do before you actually start putting on risk, before you start risking your capital. So number one, if you're a newer trader or if you're a trader that's struggling with profitability, first things first, you got to find a reputable information source, reputable educator, and go from there. You'll have to do your due diligence, but there are good ones out there. Number two, unrealistic expectations. From what I've said so far in this video, Unrealistic expectations are one of the bigger reasons why a lot of traders struggle to find consistent profitability, because they think it can be done overnight. If you're going to be coming into this industry and you expect to make a living out of trading, you're going to have to set real expectations. And real expectations are not the fact that you're going to make this happen overnight. This is going to take time. It's going to be hard work. You've got to really work on yourself. It's not an easy journey. If it was an easy journey, everybody would be doing it. And I heard a great quote this week: if trading was all about just learning the technical skills, every smart person would be a millionaire. But that's not the case. Why is that not the case? Because of what's up here. People that tend to be smarter tend to be on, the higher scale of education. They've gone through the system. They've gone through their whole, the life journey through school, being right. Being right, you were rewarded for being right with good grades, with scholarships, with awards, etc. Trading is nothing like that. In fact, you can be wrong more times than not, and you can still make money. And that is where the knowledge comes in. If you don't have the knowledge about risk, if you don't have the knowledge on probabilities, if you don't have the knowledge on strategies, it's better just to go to Vegas and throw your money on, on the Russian roulette table. Number 3, lack of psychology. This one's a big one, and psychology is something that a lot of traders struggle with, especially newer traders. And even more advanced traders, even the traders that have found consistent profitability, every trader gets to a certain point where in order to get to the next level, there's something that they have to work on psychologically in order to get to that next step. All right, so psychology is very important. Consistently profitable traders know this and they work on it. Newer traders focus more so on strategies, where to enter, where to exit. And that, in the scheme of things, doesn't matter as much as psychology, because you can have a winning strategy from a winning trader, the exact same strategy, and you'll trade it differently because the trader that has been doing it has the experience with it, and that trader, he's got the psychology, he's already worked on the mindset. That trader, even if they take a string of losses, they know where their probability is. They know where their edge lies. And so a couple of losses in the grand scheme of things doesn't mean too much. Whereas newer traders will take a couple of losses with a new strategy, and because they haven't worked on their psychology, they're not working on their mindset, they're simply going to take that one strategy and look for the next one. They're going to look for the holy grail, and that domino cycle continues until, like I said, they blow out their account or they just quit and decide that this isn't for them. Finally, not having a plan. This one's simple, guys. It's as simple as making a plan and following that plan. Being disciplined enough to make the plan, to follow the plan, and to execute on the plan. As far as a plan is concerned, where you're going to enter, where you're going to exit, you're going to have a risk management plan as far as your position sizing, how big you're going to go, when you're going to scale, when you're not going to scale. And then you're going to have a daily loss, a monthly or weekly loss, and a monthly loss limit, where if you hit any of these single limits, let's say you hit your daily loss limit for the day, you're done for the day, you walk away from the computer and you come back the next day. A weekly loss, quite similar. You've got a certain weekly figure that you're willing to risk for the week. If you hit that number on a drawdown, you're done for the week. Doesn't matter if it's on the first trading week of the day, in the middle of the week, or near the end of the week. You hit that weekly drawdown limit, you're done for that week. Same thing with the monthly limit. You've got a monthly limit, you hit that monthly drawdown limit, you're done for the month. All right? Same thing would apply for, profits, daily goals that you might want to hit. Doesn't necessarily mean you have to walk away from the desk when you do hit those. However, that's what the trading plan is. So you got the trading plan, the risk management plan, and the daily loss, weekly loss, and monthly loss limits. All right? And so by addressing all of those things, getting educated from the right education, like I said earlier, there's a lot of education out there, some good, most bad. It's up to you to do the due diligence and weed out the good companies that are actually providing you valuable information that you can't really find anywhere else. Number 2, unrealistic expectations. Like I said, you've got to set those expectations. This isn't going to be an overnight journey. If that's what you think this is, I'd probably recommend you try something else, because if you think you're going to make $1 million overnight with $1,000 to start, this isn't the industry for you. Number 3, lack of psychology. Like I said, a lot of good literature out there on psychology. We have a great psychology course as part of our elite program, which goes into neurolinguistic programming and how to use neurolinguistic programming to address certain trading psychology, certain trading mindset hacks. And we also have a great lesson on self-sabotage cycle, which is more than worth the elite subscription. Finally, not having a plan. On our YouTube channel, we have a series on how to create a trading plan, how to create a risk management plan, and even how to create a plan to recover from a drawdown. All right, so check out the YouTube channel. Make sure you search through there. We've got a lot of good content on the YouTube channel, and we've also got a lot of great content on our blog at tradeproacademy.com/blog. All right, guys, so I hope you enjoyed this video. I hope to see you guys on the 10% of consistently profitable traders, and I hope to see you guys in our room in the coming days, in the coming weeks, in the coming months, to see what a real trading community looks like with professional traders that do this on a daily basis. All right, so if you've enjoyed this video, make sure to smash that like button and make sure to subscribe to the channel. Hit the notification bell so that you get notified anytime that we go live. And until next time, guys, good luck and good trading. Take care.